Cora, and welcome the opportunity to speak on this piece of legislation today. And at the outset, Minister, look, I want to welcome the fact that we are going to put a statutory interest rate cap in place. I think it is long overdue in this country, but the difficulty is, Minister, that the interest rate cap that's being introduced is far too high. To accept the prevailing current interest rates and to enshrine that in law, I don't think is acceptable. Now, I know that the legislation will provide the central bank with the power to recommend future reductions, but the starting point in relation to this needs to be considerably lower than where it is at the moment. And, particularly in the current financial and desperate situation that many people find themselves in today, enshrining in this legislation interest rates at such a level is completely unacceptable. In fact, it's like the government is actually endorsing these type of exorbitant interest rates. So it is imperative that you look again at this in the context of committee stage of the bill, because and I know the arguments that are being made to you, Minister, is that this will ultimately reduce the supply of loans from licensed moneylenders, or that it will actually increase the number of illegal moneylenders. But the reality is very different, and the evidence is different. First of all, I think we have a very well-developed credit union movement around this country. I think you can do far more to help and support and grow the credit union movement and to support them in actively taking over the business of the money lenders, and I'll come back to that in a few minutes. But the other aspect of it is in terms of where rate caps have been introduced internationally. It hasn't led to an increase in illegal money lenders. It hasn't led to a reduction in the supply of loans. And there was a report on interest rate restrictions on credit for low-income borrowers by the Centre for Cooperative Studies in UCC. And that report has stated, and I just read out, Minister, what was stated in the report. There is no empirical and undisputed evidence that interest rate restrictions result in an increase in illegal money lending. In the UK, it was feared that the price caps on payday loans would push a large percentage of people towards illegal money lending. However, Citizens' Advice has said that the caps on payday loans have not led to an increase in illegal money lending. An analysis of debts held by Citizens' Advice clients showing that the number of loan shark debts has remained constant since the introduction of the cap. So there is evidence from elsewhere that having a significantly reduced interest rate cap does not lead to people going elsewhere and people availing of illegal money lenders. And I would ask you, Minister, to actively look at this between now and committee stage. Because, as I say, effectively we are endorsing in legislation these exorbitant interest rates, and I think that's unacceptable. And can I say, Minister, in terms of the credit union movement, and I know you're working closely with them, I believe you met them earlier today, but I think you need to actively work with the credit union movement to expand and develop their personal microcredit scheme. Ensure that every single credit union in the country provides that service, the It Makes Sense loans, that it is actively supported and encouraged and marketed by the government. And I know that something similar has been done and can be done with An Post, and I think those areas need to be explored to provide real and viable alternatives to the money lending industry in this country. Can I say, Minister, in terms of the legislation, that I actually welcome the change in the description of a money lender from a licensed money lender to a high-cost credit provider. However, I think you are making a mistake not to include in the name the word licensed. And I would ask you to look at this for committee stage, because, you know, licence does give at least some element of authorisation. What we don't want, above all things happening, is people going to unlicensed money lenders. So I think it is important that that word licensed does remain in the title, and I'd ask you to review it again. While I have you, Minister, you know, we're talking about providing credit and microloans to people. But the reality is that we can't do that unless we have a viable banking system in this country. And we don't have that at the moment with the pillar banks. You've seen, Minister, in your own constituency, in my own constituency, where we have the main banks pulling out of rural Ireland, pulling out of our provincial towns. So actually, the whole area of providing credit is contracting. And the moneylenders will fill that void unless we provide a viable alternative. And I believe that we do need to provide a new community banking force in this country. And for me, what's frustrating about it is I think we actually have the bones of that community banking force already in this country, but we do need to bring it together. We've seen KBC are pulling out of the market here. Ulster Bank are pulling out of the market. We've seen Bank of Ireland closing down branches across rural Ireland. And the reality is that there are two very distinct customer bases that are being excluded by the pillar banks in this country. And they're the personal customers and small businesses. And both elements of them need to be addressed and their needs met by a new banking model in this country, a state-supported new banking model in this country. We've 13% of people who don't use banking online. And that figure is a national figure, but you know, Minister, across provincial Ireland, across rural Ireland, that figure is far higher than 13%. And, you know, even a simple service like a 24-hour access to an ATM for both lodgements and withdrawals is being removed from many of our rural towns. That option isn't available in many of our rural towns now. And that makes a big difference to the development and growth of some of these smaller towns. You know, the government has recently launched its strategy Town Centre First, which I support the principles behind it. But it's very hard to support a town centre first approach if you don't have access to an ATM, if you can't make lodgements, if you can't take out withdrawals at any time of the day or night. There's a security issue in relation to that for many businesses as well. And I believe, Minister, unless this is driven by the politicians, by the members of Dáil Éireann and by this House, then I don't think it's going to happen, because the financial establishment in this country do not want to see a community banking initiative developed here. And I'm talking about the establishment in all its guises do not want to see a state-coordinated banking force established to actively compete against the so-called pillar banks. And there is an absolute mindset block against the state involvement in the banking sector within your own department, Minister. And I believe that's why this needs to be driven by us as parliamentarians. And as I say, the basic infrastructure is already in place, but it's fragmented. And instead of taking a copy and paste model from some other country, we should start with the infrastructure that we have here in this country. Our post offices, our credit union movement, and the two state banks that we have already, the Strategic Banking Corporation of Ireland and Microfinance Ireland. And they should be all brought together to establish a very effective community bank here in this country, which would have a comprehensive branch network right across this country and provide people with access to banking services in our smaller towns, in our local communities that have been withdrawn by the big banks. And we have the financial infrastructure there which should be exploited. And the Department of Finance, in its own report on the evaluation of the concept of community banking in Ireland by the Indecon consultants, pointed out that An Post has in excess of 500 post offices in locations where there are no banks within 5 kilometres. And, you know, it's not just about using the post office and the credit union movement, but we also need to exploit the 2 state banks that we have, the Strategic Banking Corporation of Ireland and Microfinance Ireland. And they have, as you know, Minister, been specifically designed to provide flexible finance to small and medium-sized businesses. So rather than trying to reinvent the wheel here, we need to build on the key strategic strengths that we have in terms of the physical financial network that we already have across this country, and build on the 2 economic banks that are controlled by the state, so that we actually have the levers to support our Indigenous business right across this country to actually provide the type of sustainable long-term regional employment that we do need. And as you know, Minister, the 250,000 SMEs account for 99.8% of the total enterprises in this country, employing 65% of our total workforce, and they are the backbone of the economy outside of our cities, and they need to be provided with the types of supports that can be provided through an alternative community banking model. And it's not just in terms of personal customers, it's not just in terms of business customers, but also in terms of providing a competitive mortgage market in this country. Because that is something that people don't have at this particular point in time. Now, as I referenced, Minister, I know that you have been meeting with the credit union movement. Your title has specific role and responsibility in terms of working with the credit union movement. There is a clear commitment in the programme for government to enable the credit union movement to grow and become a key provider of community banking in this country. But they are all words, Minister, and what we need to see is real and practical action to make this happen. There needs to be a root and branch review of the regulatory restrictions that are actually curtailing the credit union movement in this country. Like, the credit union movement today has over €15,000 million sitting in the bank accounts of the pillar banks at the moment, that they cannot actually lend out because of the restrictions that are there on them. Money that could be used to actually provide a competitive mortgage market in this country, to support first-time buyers, to support housing supply, to support small businesses, and to provide the type of microfinance that this legislation is providing. Because of the current restrictions that are there, the credit unions can only offer up just 3% of all the mortgage loans in this country, and up to 10% of the SME loans that are required by this market. The pillar banks have 70% of the mortgage market tied up, and the remainder is with the KBC and Ulster Bank, which of course are leaving the country. But the credit unions cannot reach their full potential and become that key provider of community banking, as is committed to in the programme for government, without alteration to the restrictive conditions that are there on their day-to-day operation. And like, if we look, Minister, I know that the central bank, just does not want to work with the credit union movement. And as far as the central bank is concerned, this credit union movement is an irritant for them. But if we are going to deal with the issue of microfinance for individuals, and helping them to wean them away from money lenders, then we need to support the credit union movement. If we're going to provide proper competition to the pillar banks in this country, then we should be accessing that 15,000 million euro of capital that is currently losing money on deposit in the banks at present. And the Central Bank of Ireland has a responsibility to actually meet the needs of our economy and our citizens, rather than just providing cheap money to the banks in this country. But if we actually compare what's happening with the credit union movement here in Ireland to what's happening elsewhere, take the United States, Canada and Australia, where they have a credit union movement as well, where that system operates in a far fairer and a far more equitable playing field than it does here. The regulatory rules in those countries mean that credit unions are offering 10 times the number of mortgages and business loans that the Irish credit union movement is offering here. Now, surely if we can get a regulatory regime under the same type of legal structure that they have here in Ireland, as we have in the United States, as we have in Canada, as we have in Australia, surely to God we can come up with a system that provides the regulatory reassurance that we need, but actually allows cash to flow into communities, to actually revitalise those communities, and to create a proper community banking force in this country that actually puts it up to the pillar banks and provides active competition that isn't there at the moment, because the credit union movement is more than willing to fill the void that's been created by Bank of Ireland, to fill the void that's been created by Ulster Bank, to fill the void that's been created by KBC. But there needs to be an urgent review of the current regulatory regime that's in place. We need to have a level playing field, a policy that is fair and inclusive to all of the financial institutions in this country. And I would hope, Minister, that you can reflect on this in terms of your engagement with the credit union movement, your engagement with your own officials and your engagement with the Central Bank. Go to Mahaba.